Is the alt season canceled? In this video, we dive deep into the critical indicators that suggest no alt season for the next 5 to 9 months and why this could be a game changer for crypto portfolios. If you're holding altcoins or planning to invest, this is a video you cannot afford to miss. Stick around until the end, where we reveal key insights and actionable strategies to navigate this uncertain market. Don't forget to smash the like button, subscribe, and hit the notification bell so you don't miss out on future updates. Let's get started. At the first, we intend to examine the Ethereum chart against Bitcoin because the variations in this chart can help us to predict the cryptocurrency market, especially in the context of the alt season, providing us with valuable insights. As you can see, we are observing a large horizontal historical channel for the Ethereum chart against Bitcoin. What is evident in this channel is that when the candlesticks touch the upper line of the channel, they then pull back downward, and this decline is strong enough to bring the price back to the lower part of the channel, near its bottom. The last time Ethereum tested and was rejected from the top of the historical channel was in September 2022, and as you can see after that, it has taken a significant downward trend toward the bottom of the channel. Alongside, we also observe a historical horizontal support resistance level in this chart, which we have highlighted here in purple. What is evident is that the Ethereum Bitcoin chart has repeatedly reacted to this line. Currently, this line is acting as a strong support to prevent further decline in Ethereum. Now we need to see whether this support will hold or not. If this support is broken, Ethereum will fall well below and move toward the bottom of the historical channel. However, the key question for us here is, if Ethereum is to test the lower line, when will this happen? To answer this question, we use two different methods. In the first method, we consider a smaller dynamic descending channel that has formed for Ethereum in recent months, assuming that Ethereum descends linearly within this channel with fluctuations around the central line. We can imagine a linear regression scenario for it. Therefore, the intersection point of the midpoint of the smaller dynamic descending channel with the bottom of the larger historical channel could be a suitable prediction. We have marked this intersection point here with the first yellow box, which is around September 2025, approximately 150 days from now. However, we will also introduce a second method to estimate the approximate time of the candlestick's collision with the bottom of the large historical channel. In this method, we use the trend-based Fibonacci time tool. For this purpose, we need 3 points, and since our goal is to predict the time of the bottom, we must select 2 points related to the top and 1 point related to the bottom to predict the time of the bottom. Now I consider the first top here and select the second top here, and obviously the bottom should be chosen here. Now within these vertical lines you can see specific time periods that have the potential to be tops or bottoms, with the nearest one being around November or December 2025, approximately 250 days from now. Therefore, we can say that given the strong downward momentum and the negative sentiment in the market towards Ethereum, and the fact that the probability of Ethereum reaching the historical bottom in the Ethereum Bitcoin chart is higher than the probability of it not reaching it, we statistically expect the continuation of Ethereum's decline against Bitcoin. We anticipate that within an approximate time frame of 150 to 250 days, Ethereum will eventually reach the bottom of its historical channel after following such paths as you can see in this chart. After that, it may potentially pull back and this time position itself on an upward trajectory against Bitcoin, thereby increasing the likelihood of an alt season at that time. Another crucial chart that can significantly aid us in predicting the timing of the alt season is the Bitcoin market cap dominance chart. As you can observe in this chart, we are witnessing a historical channel that dates back to April and May 2017, during which Bitcoin's dominance has oscillated within this channel. As evident, 2 critical lines define this channel, the lower channel line at 39% dominance and the upper channel line at 73% dominance. Analyzing this channel reveals that whenever Bitcoin's dominance tests the 39% level, it pulls back and initiates an upward trajectory toward the upper channel line. In addition to these 2 significant levels, we also observe an important horizontal support resistance level at approximately 61% or 62% dominance, which we have highlighted here with a dashed line. This level has repeatedly acted as both support and resistance throughout the history of Bitcoin's dominance. However, a key point to note is that when the candlesticks first touched the 61% level in April 2018, we witnessed a pullback from this level. Subsequently, the candlesticks tested this level multiple times before finally breaking through it and surging upward to touch the 73% level. The time between the first test of the 61% level and the eventual touch of the 73% level was approximately 364 days. Given that financial charts are said to have a memory and that past events statistically have a chance of repeating in the future, let us examine the possibility of such a scenario repeating in the present. In September 2022, the 39% level was tested, followed by a pullback and an upward trajectory toward the 73% level was initiated. Along this path, the first touch of the 61% level occurred in November 2024, and since then we have seen the candlesticks retest this level multiple times. Let me zoom in to provide a clearer picture. As you can see, it appears that an ascending triangle pattern is forming around this level. Here we have a strong horizontal resistance level, while simultaneously a dynamic support line with higher lows is also forming. In this chart, you can observe the intersection point of these two lines, horizontal and dynamic, which can be considered the upper boundary for the potential breakout of this pattern. It is worth noting that this pattern is also a bullish confirmation pattern, provided it is broken and confirmed. However, it is still too early to confirm this at the moment. Next, let us use the same trend-based Fibonacci time tool to predict the time required to reach the upper boundary of the historical channel at 73% dominance. For this purpose, we need 3 input points. Since our goal is to estimate the time required to touch the upper boundary of the historical channel at 73%, we must consider 2 bottoms and 1 top. Therefore, we select these 2 points as the bottoms and this point as the top. Based on this, it will take approximately 280 days to reach the 73% level after the first touch of the 61% level. If you pay close attention, there is a reasonable proportionality between these 2 periods. The first instance dates back to 2018 to 2019, when it took 364 days to reach the 73% level after the first touch of the 61% level. This time, in 2024 to 2025, our prediction is that it will take approximately 280 days to reach the 73% level after the first touch and subsequent tests of the 61% level. Considering today's date, we can expect this upward trajectory in the Bitcoin market cap dominance curve to continue for around 150 more days from now. In other words, for the next 150 days, at least on paper, we cannot expect the alt season. It is important to note that these analyses are based on statistical and probability theories, and it is never possible to make definitive or absolute predictions in domains such as financial markets, where changes are inherently stochastic and random. The final part of our video focuses on the analysis of the crypto total market cap, excluding Bitcoin and Ethereum chart. As you can see, this chart shows a dynamic ascending channel within which the candlesticks are forming higher highs and higher lows. It appears that this pullback will continue until it reaches the historical peak at approximately $1.14 trillion in market cap, representing the total cryptocurrency market excluding the 2 giants, Bitcoin and Ethereum. If this trend continues upward to reach that historical peak, we will need to observe the market's reaction to that level. However, before that, in this smaller time frame, there is potential for other altcoins, excluding Ethereum, belonging to sectors such as DeFi, AI, gaming, NFTs, and meme coins, to show relatively positive performance, especially those with stronger fundamentals. These altcoins may bring some joy to their holders. However, a true alt season will only have the potential to occur when the historical ATH at 1.14 trillion is breached. If you pay attention, this event is expected to take approximately 150 to 280 days. If, after this period, a significant influx of capital from investors flows into altcoins and substantial liquidity is provided, then there is a possibility that the peak level will be broken with strong momentum. At that point, we can expect a true alt season to unfold. In conclusion, we must highlight that, in all likelihood, Ethereum will continue to lose its value against Bitcoin over the next 150 to 250 days, maintaining its downward trajectory relative to Bitcoin. In the next 150 days, Bitcoin's dominance is expected to continue rising, and it is probable that within the next 150 to 280 days, we will not witness the all-time high ATH of the total crypto market cap, excluding Bitcoin and Ethereum. When we consider all these factors together, we can reasonably expect that a true alt season will not materialize within the next 5 to 9 months. If you have been following along with the video up to this point, I sincerely thank you. Please share your thoughts in the comments section and don't forget to like and subscribe so you don't miss out on our future analytical videos.